What I then do, I borrow safe marginal amounts against my Bitcoin, my Ethereum, my Solana, and my SUI. And that's about where I stop in terms of market cap, because anything lower than that, it's too volatile. I don't want to get liquidated. I'm borrowing against my Bitcoin, my property, the same way you would take out a mortgage against your home and use that to invest in something else. People, the HELOCs and stuff like that, except it's a whole nother thing. I'm not going into that. So anyways, you take this money you borrow, and this borrowed money at 5-6% a year, you treat that as a business loan. That is your business loan to actually plug into DeFi and play in DeFi. And it's important that you don't take on too much risk. Like, pools like the black hole pools, right? They pay about 1% a day. It's fantastic, but you do not want to use your borrowed capital for those. You would want to use borrowed capital for things more like AVAX to, let's say, Bitcoin, something that's going to be around for a long time. Or maybe even something like, if you wanted to, or maybe even something like ETH to USDC, right? Focused on cash flow and longevity, something to consistently make returns and not lose, more importantly. You don't want to lose this capital. When you start making money, when you're making your $1,500 a month, you can then use that to then open your risky positions like black hole that make 1%, because it's risk-free and you've preserved your starting capital, which is very, very important.